In today's video, I'm going to be having a quick look at gold. We're also going to look at Fed Bostic and what he has said recently. As well as that, we're going to have a closer look at what's going on in Melbourne and what we might expect in the near term. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing that we're going to have a look at today is the infections around the globe of coronavirus. We have cracked 12 million globally, and we've got nearly 550,000 infections that have caused death. So we are seeing an epidemic resurge, and it is something to keep an eye on over the next coming weeks because a lot of the data, specifically in the US, is going to be dependent on it. Now, moving on from that, I have been looking at gold. Now, gold has cracked past the $1,800 mark per ounce. This is something that doesn't happen too often, and the last time we sort of saw numbers this sort of high was back in 2011, where the next point of interest that I have is at $1,920.30, which is the high that we recorded in 2011 and the highest placing that gold has ever gone to. Now, we're also sort of worried here about what's going on. What's driving the price of gold? The reality of the situation is that the pandemic and the response of fiscal and monetary policy is flooding the markets with cash. So this then fuels some fears about the idea of where inflation might go, aiding to the idea of more of hyperinflation than the other options, but mostly on that side. Now, the other interesting factor that you're always going to want to keep an eye on when it comes to gold is that gold and the US 10-year Treasury yields generally move in the opposite directions to one another, and today was no different. We saw a 0.8% fall on 10-year Treasury yields, bringing them to the lowest point that we've ever seen them on. And why might that be happening? Well, the first reason that something like that happens is because people are really looking at the idea of this inflationary response and a problem that's going to come with all the stimulus. And therefore, when we look at Treasury bonds and the value of the US dollar, then they are actually going to get affected by inflation versus gold, which is unlikely to have the same sort of effects. So we are seeing safe haven currencies of the safe haven markets. Now, moving on from that, we've heard a little bit from Atlantic Fed Chair Raphael Bostic. Now, Bostic has basically said that he feels that more stimulus may be necessary. And the reason is for this is that he's concerned about small, medium enterprises, specifically the smallest of the small, where the stimulus really isn't getting to because they don't have some of the banking connections and, of course, because they don't have the level of support that's required, like we're seeing in some larger entities. Now, this is all being delivered by the virus naturally, and he's also concerned about the virus and the causing of the US recovery. Now, right now, we're seeing it to slow down a little bit. Naturally, with higher infection numbers means less people able to work, which means that likely more stimulus will be needed. But in addition to that, it means that they are slowing down. And that slowdown is going to affect them long term to come, just like we're probably going to see in Australia as well, as particularly with the Melbourne situation. Moving on to the Melbourne lockdown, we have a couple of issues to look at. The first thing is that Melbourne, and predominantly all of Victoria, is responsible for a quarter of Australia's GDP. So that means that if we have another 6-week lockdown, those companies that only just survived the first one might not make it through this time. And a number of people have been quite vocal about this already, saying that they might not be able to survive it, they're concerned for the future, and they're worried about their own financial stability, let alone the rest of the economy. So if we do see this fall, then it means that we can probably expect that we're going to see problems across the wider GDP figures for Australia, and that a larger contraction should be expected towards the end of this year. Now, when we look at the SME side of things, the idea of what's going on in the American situation and the Australian situation, they're kind of similar. We're seeing that the ones that are getting most affected are those in the hospitality industry. Food services, restaurants, bars, pubs and clubs, and of course hotels are the ones that are really suffering the most in this sort of instance because they are relying on the impact of tourism and people actually spending money. Whilst in a lockdown, we saw before, consumer expenditure went way down, and their confidence in actually wanting to spend money also reduced. So we're going to have to keep an eye. I think we're going to see some interesting consumer sentiment reports over the next coming weeks, purely because of the Victorian situation. I think we're likely to see some reductions in how much people are actually spending, and I think it's going to travel. I think we are going to have a ripple effect. If we're seeing problems in Victoria, then probably people in New South Wales or South Australia are going to be worried about the infection getting to them. They might be a little bit more conservative in their spending, and they might delay going back to work in some instances. We'll have to see to find out further down this track. But either way, the result is likely to be catastrophic. Now, moving on from that, I do have a little bit of news ahead for you. We have Eurogroup meetings all day. It is a tentative announcement, so they are unscheduled. Keep an eye on those as you come into the European session. We also have US unemployment claims, US natural gas storage later this evening, and US 30-year Treasury bond yields to be coming out, plus the auction prices around them. So it'll be interesting to see the 30-year Treasury bonds, purely because we know 10-year ones have had a bit of issues recently, specifically with gold, but also the potential for inflation. And not that long ago, we were seeing inverted yield curves. And for the first time, we saw 30-year Treasuries invert. So there is an interesting number or a point there to keep an eye on what happens for the US economy in the future. Now, if there's anything from today's video you've liked, or perhaps one of the webinars or television appearances, then please feel free to get in contact with me. Let me know your question and I'll get back to you as soon as I can. The email address is talktoal@acy.com. And of course, don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.